Pat, what characterized the real estate market in the first quarter of 2011?
Keith, we find it very interesting that there was less than a 1% differential in production for Q1 of 2011 versus Q1 of 2010. And we think the buyers continue to take advantage of favorable home prices and attractive interest rates. We're very encouraged by the fact that last year in 2010, the market was really supported well with the tax credit. And we maintained that same production without the benefit of the tax credit in 2011.
So what I hear you saying then is that the same number of buyers, or nearly the same, an increase in buyers year over year, even though we had the tax credit that was driving a lot of transactional volume last year. Is that right?
Absolutely. What we feel is that investors are out there taking as much advantage as possible as they can of these prices. Many of them are cash buyers. We find many other buyers in the market right now that found that it's much more attractive to own and very favorable financially compared to renting.
Interesting. Okay. And where were the bright spots in the quarter?
Well, we talked about the investors taking advantage of opportunities and renters looking to purchase, but also we find on the supply side that the distressed properties, the short sales, and the bank-owned properties are providing great pricing if people are patient and willing to wait for those transactions to close.
So some of these distressed, quote-unquote, distressed assets that are out there are still creating good buyer opportunities, good buying opportunities?
Absolutely, and we expect that that will maintain on path for the remainder of 2011 and perhaps beyond, where we will see more short sales entering the market that really are going to actually be sold and close escrow, and the banks do have inventory as well that they will continue to release.
And what was the overall trend for prices in the first quarter of 2011?
Well, Keith, in all 9 Bay Area counties, we saw a slight trend lower in the median price. I can tell you that Napa was off only 0.3%. 6 others were only off 4%. San Francisco and Sonoma led the league with a 9% differential in median price. We feel that that's largely due to investors and first-time buyers in the market in that first quarter, heavily in that first quarter.
And how much of that do you think is attributed to maybe some normal seasonality slowdown coming out of people who bought in November and December and would be closing in January and February?
Well, I really think that, again, those metrics are fueled largely by who's buying and what inventory is moving. I think that you'll see an increase in median price as the move-up buyers emerge in the market, and that usually happens in spring and summer.
Okay, so still a little downward pressure into quarter one, but you think that'll maybe normalize a little bit as the move-up buyers come into the space?
We do believe that's pretty much the way the track follows in the Bay Area, in those 9 Bay Area counties.
How quickly did homes sell in the quarter one?
Another interesting metric, Keith, that the days on the market remain unchanged year over year at 73 days for the entire 9 counties. However, San Francisco really is moving more quickly with 54 days on the market on the average, and Marin is kind of higher at 117, probably because of price point and financing in the Marin market.
Pat, why is days on market an important metric to pay attention to determine where the market's headed?
Well, it's the number one indicator where the market's headed. When we see inventory moving at a much faster rate, we know that the entire inventory is going to decline, and that's going to put an upward pressure on prices.
Pat, what's happening in the Sacramento market?
Keith, the Sacramento market continues to be fueled by opportunities created with the short sale listings on the market. Also, bank-owned properties are on the market. The prices are attractive. Interest rates are very low, so we're seeing a lot of cash buyers in the marketplace, and we're seeing a lot of first-time buyers taking advantage of FHA loan programs. So that continues to drive the market, and we're going to see pretty much the same throughout the remainder of the year.
And are you seeing anything at any various price points, or how is that impacting the market or changing based on the market in Sacramento?
You know, that's another great question. What we've seen in the median price is a 7% adjustment down year over year, and only 15% of the homes in Q1 were priced over $300,000, which at one time was close to the median in Sacramento at the peak of the market.
And now for the $62 million question, Pat. Where do you see the market headed going into the next quarter?
Well, Keith, we're very encouraged that we're heading into our peak selling season. We love the fact that interest rates remain incredibly low, that the prices are attractive. We see so much opportunity for buyers out in the marketplace that we really believe that it's going to be a great year, and that anybody that can should buy a home right now, whether they're an investor, a first-time buyer, move-up buyer. Just get out there and get busy in the marketplace.